You're 18, scanning membership cards at the front desk of a struggling gym in Dover, New Hampshire for $15 an hour. 22 years later, you ring the opening bell at the New York Stock Exchange, and the company you just took public is worth $1.6 billion. Between those two moments sits a $35 billion industry, 77 million paying members, and a churn rate that quietly burns a third of them every year. This is every level of owning a gym in America and what it actually costs to climb. If you like breakdowns of how careers actually progress, like and subscribe so you don't miss the next one. Level 1. The front desk. You're 18 to 25, 0 to 3 years in. The Bureau of Labor Statistics puts the median wage for fitness trainers and instructors at $46,180 a year, about $22 an hour. The bottom tenth makes $27,580. Floor staff at the big chains earn $8.50 to $15 an hour. There are 370,100 of you nationwide. The day is repetitive. Swipe-ins, towel checks, selling black card upgrades, asking the same walk-in if she's tried the app. The black card is now $29.99 a month, up from $24.99. Your manager wants the upgrade closed before she clears the lobby. You learn the script. You learn the objection handlers. You learn that about 60% of the people you sign up will not visit the club in any 30-day window, and that this is fine because they keep paying. The classic Planet Fitness membership is $15 a month. It used to be $10. The company is engineered for the people who don't show up. If you're a personal trainer, you take 40 to 60% of every session. $40 to $60 splits on a $100 hour. You sell 6 packages, you eat. You sell 2, you don't. Most of you leave inside 18 months. Then COVID hits, and the industry sheds 1.4 million jobs almost overnight. The ones who stay learn the real product isn't fitness, it's the recurring debit. Ready for level 2? Level 2. The single club general manager. You're 25 to 32, 3 to 7 years in. Pay scale puts your average pay at $49,120. Salary.com pegs the median at $68,558. Realistic total comp lands between $50,000 and $75,000 a year, with a small bonus tied to net member ads and personal training revenue. You run the building. You don't own the upside. The schedule is yours. The labor budget is yours. The equipment maintenance is yours. The four-wall margin is yours to defend. January arrives, and 9,000 new members sign up across the region. By March, a third of them have called to cancel, and you stand at the desk reading the retention script back to a woman who joined on resolution night. You hold the gross. The district manager calls. He asks for comp sales, ramp progress, and personal training attach rate, in that order. You answer in numbers because that's the only language he speaks. You hit your number. Then COVID closes your doors for 14 weeks. The industry loses 22% of its facilities permanently, more than 1 in 5 U.S. gyms gone, and $29.2 billion in revenue between March 2020 and June 2021. You survive. You reopen. You are 31 years old, you make $68,000 a year, and the franchisee who owns your club just bought 2 more. Then he asks if you want to run one of them, or buy one. Level 3. The single unit franchisee. You're 30 to 45, often a career switcher with a second mortgage and a personal guarantee. Anytime Fitness is the cheapest serious door. $42,500 to sign, between $381,575 and $783,897 to build, and a flat $820 a month royalty cut for the next decade. Average annual revenue per club, $441,116. Owner take home on a mature unit, after debt service, $60,000 to $120,000 a year. Planet Fitness is the prestige unit and the bigger gamble. The franchise fee is only $20,000. The total investment runs between $1,504,600 and $5,158,500. The royalty is 7% of every dues dollar, plus another 2% into the National Ad Fund. The average annual revenue per franchised club, per the FY 2023 disclosure document, $1.83 million. The implied mature club EBITDA is about $637,607. Payback runs 6 to 10 years. You sign. You build, you ramp. Then F45 walks in. The franchise fee is $60,000. The build-out is $349,000 to $786,000. The pitch is high-intensity, celebrity-backed, growth-coded. Mark Wahlberg's investment group put in $450 million at the 2019 valuation, and the 2021 IPO priced at $16 a share for a $1.4 billion valuation. The median F45 studio earns $407,220 a year. Your studio earns less. By the end of 2024, F45 has 753 studios, down from 1,749 at the 2021 peak. The stock that opened at $16 trades at 1/10 of a cent on the over-the-counter sheets. A 99.99% destruction in 52 months. You don't make it. Or if your sign says Planet Fitness instead, you do, barely. The bank owns your build-out. You cut a royalty check whether anyone shows up. You learn what personal guarantee means when Blink Fitness, owned by Equinox, files Chapter 11 in August 2024 with more than $280 million in debt. The retention benchmark across the industry, is 66.4%, meaning a third of your dues base walks out every 12 months, and you have to find them again. Every January, every single year. Level 4. The multi-unit operator. You're 35 to 55, 8 to 15 years in. This is where real wealth begins. Planet Fitness's 2023 annual filing shows 2,319 franchise stores, controlled by just 103 franchisee groups, down from roughly 200 groups operating 1066 clubs in 2015. The average group now runs 22.5 clubs. 8 years ago, it ran 5.3. The single-unit operator is being squeezed out. To get here, you sign an area development agreement, a binding schedule committing you to build, say, 10 more clubs in 36 months in a defined territory on the franchisor's timeline. You walk into a regional bank with the agreement, your existing club's profit and loss, and a request for $25 million. They want a personal guarantee on every dollar. You sign. 10 mature Planet Fitness clubs aggregate to roughly $6.4 million in EBITDA before corporate overhead. The math finally works. Then 2020 happens, and the lesson of 24-hour fitness arrives. Acquired an $1.85 billion leveraged buyout in 2014 by AEA investors and the Ontario Teachers' Pension Plan, 24-Hour Fitness files Chapter 11 on June 15, 2020, with $1.4 billion in funded debt. More than 130 clubs close permanently. The lenders take the keys. Anytime Fitness claims 60% of its franchisees own more than one club. Planet Fitness's largest groups now operate 70 to 200. CDM Fitness Holdings, one of the system's first area developers, runs 68. You either scale or you sell to someone who has. Level 5. The PE-backed mega operator. You're 45 to 60. The private equity firm calls. They've been watching your portfolio. National Fitness Partners runs more than 200 Planet Fitness clubs, backed by Argon Capital. Tamax Group, backed by Trilantic, runs more than 175. In 2024, Flynn Group buys Grand Fitness's 98 clubs from HGGC and lands at 141 Planet Fitness locations, its biggest fitness play yet. The recap structure. They buy 70 to 80% of your equity, fold it into a platform, give you a $20 to $100 million rollover stake, and put you on the board. You keep operating. They run the capital stack. You learn whole business securitization, bundling the royalty streams of your clubs into bonds and selling them to insurance companies. You learn net leverage ratios. You learn that the 2020 closures took down 4 major chains. 24-Hour Fitness. Gold's Gym, sold out of Chapter 11 to RSG Group of Germany for approximately $100 million in July 2020. UFit, then Blink in 2024. Equinox itself. The luxury brand the Erico family sold to related companies for $505 million in December 2005. Refinanced Sohn $0.8 billion of debt in March 2024, with 6th Street and Silver Lake leading the strategic investment. The boxes are commodities. The capital stack is the business. Level 6. The brand owner. You're 50 to 70, you don't run clubs, you own the system. Doug Levine sells Crunch Fitness to Bally for $90 million in October 2001. Bally sells it to Angelo Gordon for $45 million in 2006. The Errico family sells Equinox to Related for $505 million. Mike and Mark Grondal sell about 75% of Planet Fitness to TSG Consumer Partners in November 2012. A $505 million enterprise value, $480 million in cash to selling shareholders. They keep the real estate underneath the buildings. The franchisees pay rent up to the founders for the next decade. Crunch trades again in April 2025. Leonard Green and AMP Partners buys the majority from TPG Growth, terms undisclosed. Roughly 58% of Planet Fitness corporate revenue, about $622 million in fiscal 2023, is extracted from franchisees through the royalty stack, the National Ad Fund, and equipment sales. The franchisor sells the treadmills to its own operators. The plumbing earns more than the gym. Tom O'Bravo buys ABC Financial, the gym billing software, for about $450 million in 2018, and reportedly explores a sale at about $3 billion in 2025. Vista takes MindBody private at $0.9 billion in 2019. The biggest fortunes adjacent to fitness are billing software, real estate, and royalty extraction. Level 7. The public company. You're 55 to 70, often 25 years in. There are 3 named U.S. Jimmy POs of consequence. Lifetime Fitness goes public on June 30, 2004, at $18.50 a share, raising $183 million. 11 years later, Leonard Green and TPG take it private at $72.10 a share. More than $4 billion enterprise value closed June 10, 2015. 6 years after that, Lifetime goes public again. $18 a share, $702 million raised. About $3.5 billion valuation, October 7, 2021. Planet Fitness lists on the New York Stock Exchange on August 6, 2015. At $16 a share, $216 million raised, a $1.6 billion valuation. Chris Rondeau, the front desk hire from Dover in 1993, rings the bell. By April 2026, the market cap is $5.53 billion. F45 lists at $16 on July 15, 2021. $325 million raised, a $1.4 billion valuation, Mark Wahlberg standing next to the founder on the floor. 25 months later, F45 voluntarily delists. The single biggest gym payday of the modern era doesn't come from a workout. Bahram Akradi, who opened the first Lifetime in Brooklyn Park, Minnesota in 1992, earns $218,226,302 in 2025, almost entirely from exercising 9.388 million options granted at the 2015 take private. His remaining holdings exceed $515 million. Here's what nobody at the front desk tells you. The biggest gym fortune of the decade was an options exercise. Not a barbell, not a bench press, not a single squat. F45 and Planet Fitness IPO'd at the same price on the same exchange, with the same pitch, 6 years apart. One turned $16 into $5.5 billion. The other turned $16 into a delisting and a $7 million severance package within 13 months. Same desk, same ticker price. Different decade. The product Planet Fitness sells isn't fitness. It's a $15 recurring debit, engineered by the company's own admission, for the 80% of Americans who don't have a gym membership and don't really want one. 40% of Planet Fitness members had never belonged to a gym before they joined. About 60% of them don't visit in any given month. They keep paying. That is the entire business model. Mike Grondal figured it out in Dover in 1992, and then he kept the buildings. Chris Rondeau answered the phones in Dover in 1993, and then he kept the company. Bahram Akradi opened a club in Brooklyn Park in 1992, and then he kept the options. The treadmill spins. The card swipes. The debit clears on the first of the month. Whether anybody walks through the door? That's a different question entirely.